timber tax appraiser for the Department of Revenue. We have Noah Hoffman, our assistant timber tax and gravel tax appraiser here, and Allison Osier, our administrative supervisor. We're going to give you a brief synopsis of the timber yield tax law, the intent to cut, report of cut, and abatement and appeal process for timber yield taxes.
Hello, everyone. So one thing to know is this presentation is intended for informational purposes only. And it's not a substitute for seeking professional advice or for reviewing the applicable laws and rules, especially as things change over time. Another disclaimer we have is there is a proper way of reporting RSAs and different administrative rules. Just for the purpose of the presentation, since we discuss so many, we're just going to be abbreviating them throughout. Different documents we'll be discussing throughout are listed here. We'll be talking about RSA 79, which is Forest Conservation and Taxation. Different forms like the PA7 is the intent to cut that you submit when you're going to be having logging operation on your property. PA6, Timber Tax Certificate, the report of woodcut, and then some other ones such as Timber Tax Loss Synopsis, to stumpage values. We'll be going through that. We'll show you as we go through the presentation these different forms. So this is our website. We want to just give you a brief overview. There's a lot of beneficial resources on it. This is the home page. You have different access to laws and rules and news and announcements. You also have technical information releases. So if there's anything you want quick, you can sign up for e-news on these, or you can always check them. Technical information releases has a history going back quite some years, but it's also a quick way to get updates on different laws and rules that are being administered or that are new. This is just another brief overview of the homepage. Municipal and Property Division is where you're going to find most everything related to timber tax with regards to minus a couple forms that are on our forms page. You can access it by going up to the top with the About DRA. You can click on Municipal and Property Division there, or you can also click on the little house down below. From there, under Taxes Administered is where you find the timber tax page. It also has related links, such as educational events. They do have timber and a combination of a timber and gravel tax that gets put on usually once or twice a year. Those educational events get posted there, and they try to host them in different locations throughout the state to provide accessibility for owners, municipalities, and assessors. This is the timber tax page. Like I said, the only thing you're not going to find on this page is a couple forms like the PA7, which is the intent to cut you file. You will find that under our actual forms page where the department has all their forms. But here you have frequently asked questions, the laws and rules again. It'll link you to the main laws and rules page where you can find the proper rules, RSA 79 and then Rev 3400, which is our administrative rules for the department related to timber tax. You also have timber tax guide on the right. Related links and contact information. Rick loves when he gets calls directly to his cell phone, so we have that listed down below, and then we also have his office line. This is the municipal information tab. It's good for everyone to see, not just landowners. Typically the municipalities use this, but this way, if you are a landowner and you want to see, what is the municipality going to be looking for when I file that intent? What do I need to make sure I have on it? Does the logger have all the correct information? You can find it. There's a checklist here and other guidelines as far as what they use, as well as a timber tax assessment worksheet, which we'll talk about later. But that's something that can help the municipality value the timber that you're reporting.
Okay. Average stumpage value information. This is what the municipalities use when they assess the stumpage value on the timber that the landowners harvest. These values are generated from two surveys. We do them twice a year. We do one in the spring. We've just sent the surveys out to the loggers and foresters throughout the state. The results are compiled, and every 6 months we update them. You can see the most recent ones are, this is an old web page, isn't it? The most recent ones are the October 1st, 2025 through March 31st, 2026 stumpage ranges. They're divided into three sections of the state: the north, the central, and south. So when you receive your timber yield tax bill, if you're curious how the town came up with your assessed stumpage values, just go to this page on our website, pull up the applicable time period, and then look at the the district and the state that your property is located in. It will give you the stumpage ranges that the municipalities use. And this is just an example of the central region of New Hampshire for October 2024 through March 2025. And those are the ranges that resulted from the stumpage survey for that time period. White pine, 130 to 200, low end, high end. Some of the more valuable species, the hard maple, 200 to 450, oak, 200 to 400. And then on the right side, you have the lower quality, the pulpwood, and high-grade spruce fir and cordwood. So prior to 1942, timber was assessed and taxed as part of your general property tax bill. So the larger landowners in the state realized that if they cut all their timber, they couldn't be taxed on it. And that's exactly what was happening. There was large-scale liquidation harvest taking place throughout the state. There was very little forestry and silviculture being practiced. The governor at the time appointed a commission. It was comprised of a senator, a state representative, Jason's predecessor at the time, the state forester, some municipal officials, and some of the larger landowners. Their mission was to come up with a way to convince and encourage these landowners to start practicing good forestry and stop the liquidation harvests. Their solution was to remove timber from general property taxation. That required a change in the state constitution. And in 1949, the timber yield tax law was enacted. And ever since then, timber has been taxed once at 10% of the stumpage value when it's harvested. We are not the only state that has a timber yield tax. We wanted to show you a link to the National Timber Tax website page. Andy, you may be showing this in your presentation later as well. But we are the only state that taxes timber once. And you can see here that some of the other states, they have an ad valorem tax, they have a property tax, severance tax, yield tax, income tax. New York is a prime example. They have a timber yield tax. The value of the timber is also taxed in the income tax, and your timber is also assessed and taxed as part of the property tax as well. This is just another slide showing the various yield tax rates.
So part of going through this, it's important to just know general terms and definitions that we use. So starting with RSA 79.1, forest conservation definitions, assessing officials. So those are the charged by law with duty of assessing taxes in the city, town, or unincorporated place. These are going to be your board of selectmen, your town council. They're going to be the municipal assessing officials. There's RSA 79.1 has 4 definitions for owner. For purposes of joint tenants or joint tenants with rights of survivorship, tenants in common. With tenants in common, we'll get into that in the next slide. There's any one or more of the tenants in common that hold title to the subject property can sign an intent. Joint tenants, everyone is responsible for signing that intent to cut. Previous owner who retains timber rights to land and registers his or her claim with the Registry of Deeds, and any person who has purchased stumpage and cutting rights on public lands. In our definitions, which we'll also show later, there is an additional definition for sole owner. So just one owner of a property, and that includes an LLC. So as I know, tenants in common is a little bit different. For tenants in common, any one or more of the tenants in common may sign an intent to cut. However, any non-signing tenants in common shall have been notified by certified mail by the applicant of the intent to cut at least 30 days prior to cutting, and a timber tax bond is required. That ensures that the securing payment for the yield tax, if any tenants do not sign or give a power of attorney to sign that notice. Exemptions, this defines who does not have to file the intent and who is not subject to the tax. We'll note those exemptions as we go through. Stumpage value is the market value of timber standing on the stump at the time of cut. And tax year is what we follow. So it's April 1st through March 31st. It's not January through December. One
of the bigger exemptions is the exemption for a qualifying sugar orchard. In order for a sugar orchard to qualify, it has to be a source of sap production for maple syrup and products. In other words, the trees need to have been tapped at least once in the last 3 years. The stand needs to contain at least 50% red and sugar maple before the thinning takes place. And the boundaries of the sugar orchard need to be clearly defined on the ground by a licensed forester. The reason for that is if one of the assessing officials wants to go to the property and make sure that this is a qualifying sugar orchard, they can identify it on the ground. Any trees that are harvested from a qualifying sugar orchard for the purpose of enhancing sap production are not subject to the yield tax. An intent to cut is still required, a report of cut is still required, but there's no yield tax. And there's no volume limit on the exempt trees that are harvested within a sugar orchard for the purposes of enhancing sap production. And I can give you an example. On the southwestern part of the state a few years ago, there's some large maple producers down there. One of them took down their sap lines they were going to upgrade their sap lines. They did a thinning on about 30 acres and they cut over 200,000 feet of white pine within their sugar bush, and all of it was exempt.
So these are the Rev 3400 definitions, which we briefly mentioned. These are the administrative rules that the department follows. Average stumpage value list, we touched on this. Those are what we showed you that are published on the website. They're the published range of stumpage values for the various species of wood or timber as derived from the surveys that we conduct twice a year. So we do one in the spring and then a survey in the fall. Commissioner is the Department of Revenue's commissioner. Cordwood and fuel wood. Cordwood and fuel wood are defined as wood that is cut into specified lengths or tree length to be used in wood stoves and wood furnaces for heating purposes or used in the production of maple syrup. We have a specific definition for cordwood and fuel wood because there are similarities between pulpwood, but they are valued differently. So it's important we have separate definitions and they're reported separately on the intent to cuts and the report of cuts. Department, or DRA, is Department of Revenue Administration. Extension is the written notification to the municipal assessing officials by the owner no later than March 31st that the cutting operation will extend beyond April 1st. That gives landowner until June 30th to file the report of cut. And it's important to note that the extension is filed by the owner. It's not filed by the logger or forester. It's filed by the owner.
I want to jump in for a minute. Mm-hmm. The other thing that's important is that this is a notification from the owner notifying the town that you're going to extend the operation. You're not asking the town for permission. You're telling them you're going to extend it.
High grade spruce and fir, tree length spruce or fir that is sold to sawmills, at saw logs. This is typically seen in northern New Hampshire. It's not common in southern New Hampshire. Municipal assessing officials, we touched on that. It does follow the same similar definition as RSA 79. It's your governing body of the town or city, board of assessors, town council, city council. This includes county commissioners of the unincorporated places up north. Municipality is your city. It's a term for the city or town. Bedford, Dover, they're all municipalities. Original is the first filing by an owner in a tax year of the Form PA7, the Notice of Intent to Cut Wood or Timber, containing original signatures of the municipal assessing officials and the municipality where the cutting of wood is to take place. Something to note with that is, as common nowadays, especially that a logger or forester or the owner is filling out an intent and they go ahead and email it to the other party for signatures. And then that copy is then taken to the town where it will be signed by the assessing officials. That's okay. You can absolutely do that. If you ever receive communication otherwise that the town won't accept the intent because it doesn't have those signatures originally given, please notify us and we'll contact them and we'll get that straightened out. These are the definitions of owner. This is the definition that does include that there is one owner. So this has 5 definitions instead of the 4 that's in RSA 79. So any person who owns the land, including joint tenants, tenants in common, owner of timber rights to land who registers their claim with the Registry of Deeds, a person who has purchased stumpage and cutting rights, and any person clearing or maintaining rights of way that sells or agrees to sell the wood or timber. Pallet and tie is all saw logs listed on mill scale slips as either pallet, tie, or box grades. Public lands or lands owned by, state forests, so owned by the federal government. You have state government lands, and then towns and cities, school districts. Pulpwood, this is what we discussed earlier with cordwood. Pulpwood is smaller, lower quality timber used with principal purpose of making wood pulp for paper production, raw material for wood products. This is different than cordwood, which is why we have two separate definitions, and you want to make sure you're reporting them as separate on their appropriate lines when you're filing. Saw log is all grades of saw logs listed on mill scale slips other than pallet, tie, or box grades. Shade and ornamental trees. These are trees that are within striking distance of a maintained permanent structure and are solely maintained by the owner for shade or ornamental purposes. You do not, if you're having an operation completed because you have all these trees surrounding a permanent structure and it's just for that purpose, you're not required to file an intent to cut and pay a timber tax on that. It's to prevent anything from happening to that permanent structure. Stumpage value is the market value of uncut standing timber at the time the timber is cut. Supplemental is a subsequent filing by an owner in a tax year of the Form PA7, the notice of intent to cut. So this is the original that you filed earlier. If it's determined that the estimates that were provided on the intent are going to be exceeded by a certain amount, which we'll discuss later, you're filing a supplemental. So you're continuing the operation. Tax year, again, we discussed that. That's April 1st through March 31st. MBF is the number of board feet of saw logs expressed in thousands. So this is how you're going to be reporting the amount of wood that's being cut on the intent to cut and the report. They're reported in MBF, or 1,000 board feet, as we say.
And we have some examples, and it'll make much more sense in a few minutes.
Yield tax, this is the timber tax. So the 10% tax assessed upon the stumpage value of wood or timber cut at the end of the operation. And whole tree chips is wood that is processed through a wood chipper or grinder at the site of the logging operation. That's used primarily for wood burning energy plants and other similar purposes.
Okay, exemptions from the intent to cut process and yield tax. The first exemption is personal use. A landowner can exempt up to 15,000 board feet of saw logs and 30 cords of fuel wood for personal use, provided that the saw logs are sawn into lumber and used in the production, construction, or renovation of buildings on the owner's property. The fuel wood must be used by the owner for residential heating needs in New Hampshire. None of this wood can be sold, traded, or given away. The second exemption is for land conversion. Again, 15,000 board feet of saw logs, 30 cords of fuel wood or pulpwood, and 300 tons of chips. This wood can be sold, traded, or given away. There are a couple of other requirements in order to qualify for this exemption. Any local permits that are required for the converted use must be in place. So if you're going to put in a house, you might need a building permit, driveway permit, subdivision approval. If you're just converting a section of forest to a field or a pasture, probably no local permits are required. Again, back one more. With the land conversion exemption, if you exceed these volumes, none of the wood is exempt. So it's not like you can cut 3 times this much and exempt the 15, 30, and 300. You either cut this volume and under and exempt it all, or if you go over, none of it is exempt. And these exemptions, they're cumulative. So a landowner could use each exemption. It is per owner, per town, per year. Government and school districts that cut wood for their own use within their own jurisdiction. UNH is a great example. They're located in Durham. They have timberlands in Lee, Durham, Madbury. Any of the wood that they cut in Durham and they're using it at the sawmill, that's exempt. If they're cutting wood in some of the other towns, it's not. Anyone clearing or maintaining rights of ways or water storage reservoirs, the clearing that you see on the sides of 89 and 93, any of the state highways, that's exempt. Shade and ornamental trees. Any tree within striking distance of a permanent structure, a building, a state or town maintained road, fence, driveway, septic system, power lines, anything like that, and there are no volume limits on striking distance exemptions. Christmas trees, fruit trees, nursery stock, those are all exempt from the intent to cut process. The municipality's responsibilities when they receive an intent to cut. They have 15 days to sign it or to notify the owner in writing why they're not going to sign it. There are only 4 reasons they cannot sign it, and this is it. If the form is not properly filled out, if any of the land is enrolled in the unproductive current use category, if a timber tax bond is required and has not been posted, or if all owners of record have not signed the intent to cut. If the town gives you any other reason for denying an intent to cut, contact us here. We'll step in and take care of the town. These are the only reasons they can deny an intent. A new law that was passed just over a year ago. If all conditions for approval for an intent to cut have been met, and the town has not signed it within 15 days, and the owner has not been notified, the owner and the logger can commence the cutting operation as long as you submit proof of the intent to cut to DRA that it was filed with the municipality. It should either have a date stamp on it from the day the municipality received it, or an email with a red receipt from the date it was sent. If at some point thereafter the assessing officials determine that there is a reason for not signing the intent to cut, then the landowner and the logger will have to stop cutting and wait until the intent has been approved and the deficiencies have been corrected. If a timber tax bond is required, the town also has 15 days to notify the owner of that and the amount. Reasons that a timber tax bond would be required: if the owner is delinquent on any taxes in town, or if they're cutting on publicly owned lands, U.S. Forest Service, state land, federal land, municipality land, timber tax bond is required. Once the intent is signed and an operation number has been assigned, the assessing official should send a copy of the intent to the owner, the logger, and also to DRA. And supplementals are processed in the same manner. Violations: starting a cutting operation before the intent to cut is signed and posted at the logging site. Not filing a supplemental and exceeding the original volume estimate when a bond is required. If no bond is required, you have a 25% buffer, but if you exceed that 25% without filing a supplemental, that's also a violation. The PA6 certificate that's issued by DRA must be posted at the logging operation. It's okay to post a copy of the signed intent to get started, but once you receive the PA6 from us at DRA, that must be posted. Failure to post it, that's also a violation. All this information is provided to the forest rangers at DNCR, and they, along with DRA, enforce the timber harvesting laws in the state of New Hampshire. This is a copy of our intent to cut that you can find on our forms page. The next slide it's the back page with the instructions for filling out the intent to cut. And this is the important part for landowners. This is section 7. Make sure that you read the paragraph here before you sign it. When you do sign it, you're accepting responsibility for reporting all of the timber harvested within 60 days of the completion of the operation, or May 15th, whichever comes first. And you're also assuming responsibility for any yield tax. You have to clearly print your name, address, email address, phone number, and then all owners must sign it in this section. Here are some examples of incorrectly and correctly filled out intents. Make sure that you have the correct map and lot number. If you're not sure, contact the town office. They can give you your correct map and lot number. Is this an original or a supplemental intent? The access road. This would be the last state or town road that you would be on before you turn into the property. Make sure your acreage is accurate. Make sure the acreage of cut, it's your best estimate. Anticipated start date. At least give us a month. You don't have to necessarily give us the exact day, but try to give us a month. ASAP or as soon as mud season's over, those are not dates. Those are not acceptable. Make sure that the correct type of ownership is checked. Sole owner, joint tenants, tenants in common. And who would you like the report of cut and certificate sent to? The logger and forester or the landowner? Here are some examples of incorrectly filled out volumes. Now, remember before we were talking about MBF represents 1,000 board feet. This is important, especially if a timber tax bond is required. The intent to cut on the left in red, that shows 75 million feet of white pine. The one on the right is 75,000. That's what they were really intending to cut, is 75,000 board feet. If you have to post a timber tax bond, would you rather post the bond on 75,000 board feet or 75 million board feet? Please get your decimal points in the right spot. Go ahead.
So something that you would think we don't have an issue with is, again, making sure that owner's information is filled in and signatures. We do. Things come to us quite frequently, whether they're missing information or also just illegible. So you'll see the example on the top. None of the owner's information is filled in. They just have a signature. And then there's a rough signature on the right side for the forester or logger. And the email address is extremely difficult to make out. Can't really tell what the number is. The example on the bottom has everything filled out appropriately. Everything is clear. We don't expect everyone to have perfect handwriting, but things need to be legible because this is an official tax document. And if it's not legible enough for us to read it, it's going to hinder us processing the intent. We do process them very timely because we also have a time frame to process them. We want to make sure that the certificates and the report of cuts are getting to the owners and the loggers so that those can be posted on the sites.
Responsibility for the tax is always the individual that signs as the owner in Section 7. It could be the landowner that actually owns the property. It could be someone who's retained deeded timber rights on the land. Anyone that's purchased the timber on public lands. Timber tax bond. Again, anyone that owns timber land in the town, if they're current on their taxes, all taxes in town, no timber tax bond is required. If you're delinquent on any taxes, you have two choices. You can bring your taxes current or you have to post a timber tax bond. Tenants in common, where not all owners signed, you need a timber tax bond. And anytime there's cutting taking place on publicly owned land, the owner must post the timber tax bond. And it's equal to the expected timber tax based on the volumes on the intent. Extension, Allison touched on that. It's just something briefly from the owner. It can be an email or it can be sent by mail to the town, just stating that you're going to extend your timber harvesting operation. Make sure you reference the operation number. It must be in writing. The town must receive it by March 31st. This allows you to continue cutting until June 30th, and then your report of cut is not due until August 15th. Different types of postings. The one on the left and the one in the middle, those are very good postings of an intent or certificate. One's in a Ziploc bag, the other is laminated. The one on the right, the certificate is folded up and stuffed into a 3x5 bag. Very difficult for us to read the operation number or any of the information associated with that job. Again, the normal yield tax. Ideally, it's 10% of what the landowner was paid, but by law, it's 10% of the value assessed by the town. Hopefully, it works out to 10% of what the owner was paid. There are various reasons why there could be a difference. The first one, that maybe the town made a mistake and they overassessed the value. There could have been some incidental services received by the landowner that would have affected the stumpage value. Sometimes the landowner just signs a bad contract. So it could be any of those things. But if you get a timber yield tax bill and there's a huge difference between 10% of what you were paid and what the town assessed it at, then please give us a call. We'll look at it. Now we're going to get into the report of woodcut. This is the basis for determining the yield tax. It's sent to either the owner or logger as indicated on the intent to cut. It must be filed within 60 days of the cut or May 15th, whichever comes first, unless you have an extension, then no later than August 15th. And the report is required even if no wood is cut. If that's the case in Section 8, just write down through Section 8, no timber cut. If the ownership of the property changes at some point during the timber tax year, the report must be filed by the owner on the intent and report all volumes harvested up to the closing or the sale of the property. If the new owner wants to continue cutting timber, they need to file the new intent in the new owner's name. As I said before, the Department of Revenue Administration, NHTOA, and I, and the rangers at DNCR are responsible for enforcing the timber yield tax law. Doomage, this can be 2 times what the tax would have been if your report of cut had been filed on time and the volumes were reported accurately. So make sure that you get your reports of cut turned into the town no later than May 15th, and make sure that the volumes that you're signing off on are accurate. Here's a sample of our report of cut. And I think the blow it up, and the instructions are there. And here's the section where the landowner signs. And if you read the line next to number 7, you're reporting the wood or timber cut under the penalty of perjury. So again, check the volumes, make sure they're accurate. Both the owner and logger are signing this form under the penalty of perjury. And there have been loggers that have been held accountable and have spent some time in the state prison for falsifying reports of cut in the last few years. Go ahead.
So this is a more zoomed in view of the report of cut. Up at the top is where the operational number will go, and that's something that is generated when we receive the intent to cut. There's an operation for the report that's generated, and that's what gets sent to either you as the owner or the logger or forester. You have city and town, that'll get generated, tax map and lot, it will get generated. But number 3 is where information needs to be filled in, especially as far as the acreage of cut. Is the cutting complete? Yes or no? A lot of times we get a yes, and as you can see, there's no date provided. So on the right-hand example, you have yes, and then you have a date it was completed.
The date that should go in there for the date completed, that should be the date that the last load of wood left the landing to go to one of the mills.
Number 6, you should be listing out the purchasers of the forest products. It shouldn't just be various or numerous. List them out for us because we do enter that information as well. So we know where that timber is being reported and going. This is an example of filling out the report of cut with the proper volumes. On the left-hand side, you can see that they put 54,350. It makes a very different number when you're reporting. This form is reporting in MBF. So you want to make sure the decimals are in the right spot. On the right-hand side, you can see everything's been shifted over because they meant to put 54.350, so 54,000 board feet. Not the other alternative. You would have quite a timber tax to pay on that. Down below, you can also see people will fill in under pulpwood or tons. That's a different value. There's a spot for cordwoods. Cordwood is below. There's also a spot for exempt. So where you have exempt species. So if you have, wood that's within striking distance of a permanent structure, you're going to report that on line 9. That's where you would put that because that wood is going to be exempt.
How do the municipalities assess the timber value? Well, they're required to consider the quality, location, and the size of the timber sale. Quality would be the height, the diameter, defect, ratio of saw timber to low-grade timber. Location, is the property immediately off a public road, or was there a rather long private road that had to be built to access the property? Was it flat ground? Was it steep, rocky ground? All of those things need to be considered, as well as the complete and total volume of timber and the size of the sale. They should consider the most probable price that would have been paid was the highest and best use. In other words, Did the logger utilize the timber properly, or did they take wood that should have been sorted as saw logs and run it through their chipper? State sales and federal sales, the municipalities are required to use the accepted bid prices. Another thing that's important to consider is that timber taxes are before forester fees. I don't like this. I'm a licensed forester, but this is the law. Forester fees cannot be included when considering timber taxes. Was the sale exposed to an open market? In other words, did the landowner receive bid prices or prices from numerous loggers, or did he just make a deal with the first logger that came by? If the landowner wants to request an abatement or appeal to the town regarding the value of his timber taxes, he will need to supply the contract, the timber sale contract, any competitive bid results, and road building and maintenance costs. You have to be able to document all of this information. This is the timber tax assessment worksheet. You should always fill one of these out as the landowner or the logger. Return it to the town to assist them in assessing your timber value. And this rates the quality, location, and size of sale. And there are 3 ratings for each: poor, average, and good. The chart at the bottom takes the total score and converts it to a percent that's used on the timber billing worksheet. Certification of yield taxes. The municipalities should generate a bill within 30 days after receiving the report of timber cut, and then they provide a copy of the bill and the PA9 to us here at DRA. This is an example of the certification worksheet. You should receive one of these from the town along with your timber tax bill. If you didn't receive this, go back to the town and ask for it so you can see where within the stumpage range they assessed your timber value. Again, the yield tax needs to be assessed within 30 days of receiving the report of cut. If you don't pay your taxes, the interest is 18% after the due date, and the cutting of timber creates a lien on the land and continues until the yield tax has been paid. The appeal process. If you're not happy with your timber yield tax bill, you can request an abatement from the municipality within 90 days of the date of the bill. If the town denies in part or whole, you can then appeal to either the Board of Tax and Land Appeals or Superior Court within 6 months of the date for a hearing. Burden of proof is on the owner, so make sure that you can document everything: your timber sale contract, payment summaries, expenses for road construction. And then these are the forms and information that you'll find on our website. You'll find the PA7. The PA8 is generated from our database when the PA7 is filed. The PA6 is generated from our database. PA9 certification of yield tax, that comes from the town back to us at DRA. And you can always contact UNH Cooperative Extension, timberland owners, Forest and Lands, Municipal Association for any other additional information. Questions?
If you think of any questions for Rick and Allison, you can always email me afterwards, or there's Rick's email address right there. You can contact them anytime with questions.
I just had one, someone I know or another group had some land cut. It had hemlock woolly adelgid, and they pulled out some pretty poor wood, and the town official just scored it all a 5. Is it a scale 1 to 5? 5 was the most expensive. They were debating whether they should appeal it or not.
Well, without seeing the actual report of cut and all the other information, I don't know. When the town is assessing the operation, they're assessing the whole operation, not just one species at a time. So if there were other species cut, that may have affected where they assessed it. Was it just entirely a hemlock cut? Was that all they harvested?
I think there was some other, I'm not sure exactly. There might have been some chips. They chipped some that needed to be, but it seemed like there was just one person in the office that decided they just scored it all the same.
Yeah, then the landowner should certainly file an abatement request and contact us.
Okay.
Rick, one other question. How long does the town have to issue the tax bill? And, well, no, you said it was 30 days. How long after the tax bill's issued is it due?
It's due 30 days from the date that it's mailed.
Ooh, okay, thanks.
Any other questions? Okay, well, thank you. Then we'll continue. Thanks, Allison and Rick.
Thank you.
Andy?
Yep, I'll just share my screen here, get the presentation up.
Yep, sure.
All right. So how's that look?
That looks great to me.
Do you see a notes page or the next slide? Or
No, I just see some website addresses. I don't see any notes.
perfect. Thanks. I guess I'll just start by thanking Allison and Rick. I always get to learn a lot and feel really lucky to work in this community with these different folks, and Sherry as well, for all the work you do in NHTOA. It's great working with you. And so yeah, it's just a privilege to be able to be involved in these kind of things. So yeah, I'm following up with the equally exciting federal timber tax piece of this. And so for those that don't know me or just introduce myself, my name's Andy Fast. I'm the forest industry specialist with UNH Cooperative Extension. Cooperative Extension is the outreach arm of the university. We have county foresters, as Rick mentioned previously. You can contact Extension, work with our county foresters. If you want them to come out, take a look at your property, provide specific recommendations, help navigate some different things. I tend to work a little bit less with the landowners and more with kind of logging downstream parts of the industry. So a little with foresters, more with loggers, sawmills, and so on around forest products, market development, and the like. But I've always had an interest I was a county forester for a while and always had an interest in timber taxes. I'm one of the few. And that's because I really like the idea of being able to both do a lot ecologically and, meet all those different values that a forest provide for us in the state, but also generate revenue. And that can be really important for a lot of people. And this is an asset. And what I love about timber taxes is, usually when thinking about generating revenue off forest land, you're thinking about biological growth, right? You're limited by how fast you can grow trees and the quality of those trees. And so that takes oftentimes decades to realize those returns. This is a situation where by putting extra thought into it, doing things both legally but thoughtfully, you can create a lot of value with the stroke of a pen just by having a little bit more information. And that could be, maybe getting 10% more revenue, than you otherwise would have, just by thinking about this and understanding different options. So I'll run through this presentation, but I really welcome, if anyone has any questions afterwards, I welcome, talking with you. Reach out. I regularly and often talk with and support landowners, around some of the specifics here, or working with them and their tax professionals. So I'll give the same caveats that folks provide in the previous presentation. I'm not qualified to provide tax advice. This is all educational in nature. You should talk to a qualified tax professional, for any specific guidance. In addition to that, I'd be happy to talk from an educational standpoint around this in the future. And stop me throughout this. You know, we don't have a big group. So if anyone has a question as I'm going through, or if I'm not clear about anything, you know, feel free to unmute and just stop me. And I welcome sort of casual, informal presentations. Or you can wait till the end. That's great too. Yeah. So a few different additional resources that can be really helpful. Annually, the U.S. Forest Service with some national kind of tax experts over at Florida, and well, I'm most familiar with the individual over at Florida, but they come out with tax tips for forest landowners kind of fact sheet. And it's, yeah, only 5 pages, but it really covers everything that you might be thinking about, you know, all the big topics. And so, you know, this is just a great kind of resource if you wanted to brush up on some of this, or wanted to look at, you know, some additional information. If you wanted to go more in depth, there's a Forest Landowner's Guide to Federal Income Tax, and this is being revised, and it's actually in press now. So it's been revised and it should be coming out any day. But the last one was published in 2013. Most of it's not out of date. There may be a few things that are, but this is something like 165 pages and allows you to really dig into a certain topic if you need to. Lastly, Rick mentioned this before, but the National Timber Tax website, just another, you know, really helpful resource. It has these documents on it. I think it has both these documents on it, as well as, you know, some additional resources. So, and then also, if you find yourself just meandering, trying to find something, I've spent years of my life trying to figure out where things are. So you can also reach out, and I'm happy to point you in the right direction. May save you time if that's helpful. So yeah, so let's see, there's, you know, a whole bunch of different taxes related to timber. We just heard about, you know, timber taxes, the local timber tax. Some individuals may hold their land and their land base as a business, or classify it as a business. And so you can have kind of state business taxes impacting, you know, the revenue you generate off of it. There's all, but I'm sort of focusing on the federal income tax and the depletion deduction. And sort of the way I approach taxes is we could spend so much time and effort getting really confused about taxes. And I just like to distill this down to the simplest, the most bang for your buck, right? So that 80-20 rule. If you know that, in my opinion, if you understand the depletion deduction, when it comes into play, and how you can use it, you can get, you know, 80%, 90% of the tax benefit with really limited effort. And I feel like a lot of the other deductions and tax strategies, again, talk to your tax professional, but from my standpoint, how I've approached it is a lot of the other strategies and things people do, there's really diminishing returns, and you can spend so much time, you know, saving those extra few pennies or a few dollars. And I think sometimes, you know, individuals, they don't want to pay the federal government any more than they have to. If that's you and it's worth it, like, that's great. But, you know, if you're thinking about how you pay yourself, your own time, and the trade-offs, I'd encourage, you know, just starting with the depletion deduction. And then, unless you're a business and, you know, a real, I shouldn't say real business, but, you know, spend a significant part of your time working on forest land. And usually there's a lot of scale there, and, you know, some sort of extensive, you know, element. Technically, a landowner, if you spend enough time working on your forest land, maybe it's 100 acres, you know, you could classify as a business. Again, I see that as really, and some people try to do it because they're spending that time and they also see some tax benefit. I when I've talked to most people, I feel like there really is kind of diminishing returns, unless it's a really big part of your income and, a very well-established kind of business, if that makes sense.
So Andy, I've got some experience in that area, and I think I would disagree with you.
Okay. Yeah. So I welcome that feedback as well. And do you mind explaining a little bit more?
So I think I'm not. So I think there are two major tests for operating as a business on your forestry operations, landowner.
Yeah.
One is that you have to spend, in general, they say more than 500 hours a year doing it. So that's a huge hurdle, and most
Right.
people don't get over it.
Yeah.
But if you are, involved a lot, you're doing, invasive control and, whatever else, it isn't that hard to get over 500 hours. But the other test that you have to meet for the IRS, I believe, is you have to have a profit motive and you have to develop a profit from your forestry operations once every few years, like once every 5 years or something like
Yeah.
that. So I think if you meet those two tests, the value that I see is that your ongoing, if you're not a business, if you're just a hobby, then you can only deduct expenses when you have income, and you can only deduct expenses to the extent of your income.
Right.
But on the other hand, if you're running it all the time, you're taking classes and you're, doing invasive control and building roads and all the rest, those expenses can be deducted on an ongoing basis.
Yeah. Yeah. So
I think that's a short version.
yeah, no, so that's great. And I maybe simplified that too much. So thanks for chiming in. So I think it sounds like if you are spending over 500 hours a year, spending tens of thousands of dollars on your forestry operation, to me, that really does sound like a very involved business. I run into a lot of forest landowners that have a management plan. They're getting a tractor, they're doing limited work and pushing up, trying to push up against that 500 hours. And I'd say if it's not clearly, if you're not clearly spending, a lot of time and a lot of money on it, it can be diminishing returns. So, but that's a really great point. So thank you for bringing that up. And again, so my whole approach here is, and if you're working on your land as a business, then I think it's really helpful to get additional tax advice. What I'm doing right here is going to be, you're a landowner, you're having a timber sale. You may not, do this all the time. How do you get the most bang for your buck? You can always spend more time trying to eke out a little bit more, reduction in taxes if that's worth it to you. Oh, and also that was, so something else was brought up. You can have your business, you can have your land as a hobby, as an investment, or a business. So I would, from a tax standpoint, in order to realize some of these deductions, there should be a profit motive. That does not mean you have to run it as a business, but in a management plan, if you want to access these deductions, you should say that there's a profit motive. If it's a hobby, then I don't believe these are accessible to you in the same way. So all right, yeah, why the depletion deduction? Again, sort of covered this a little bit, but it's really the most, I think, accessible and financially beneficial deduction that there is. It reduces taxable income when you have a timber sale. And the idea is that the timber you cut, so you cut a certain amount of timber, there's a value associated with the harvest volume, right? So you're harvesting a certain volume. There's a value associated with that. And a portion of your income is not subject to federal income tax based on the volume harvested. And again, we'll just kind of keep hammering home these same concepts. Hopefully at the end it all makes sense. I know we have some foresters here, and I sort of always like pointing out the benefit of as a landowner using a forester can be that in order to access this deduction, you need a timber appraisal. Only forestry is licensed in the state. Only foresters can do those appraisals for you. And so you'd want to work with a licensed forester to get that appraisal. You wouldn't, let's say, work with a logger unless they are licensed as well to get that. Or your logging contractor wouldn't provide that unless they're licensed. And then from a forester standpoint, I always encourage, to the extent it makes sense for foresters, sometimes we talk about the benefits of a forester. They will, charge a commission for timber sales typically, and or charge hourly, but typically it's a commission. And this is a way of demonstrating a return on the forestry service as well, bringing this knowledge, the appraisal, and so on. You can earn a lot of money back right there for your client. All right. So the first thing is, if folks own property for longer than 1 year, it's a long-term capital gain, or they can claim that income as a long-term capital gain instead of ordinary income. So that's just a consideration. If someone recently purchases property, if they were going to harvest fairly quickly after that, then they don't have that long-term capital gains rate of 15%. It would be, short-term capital gain. So just be aware of that. If you wait longer than a year, that can be advantageous. And then also I use 15%. I think technically it can be higher than that if you're, a really high income earner. But for most folks, it's 15%. So just be aware of that. So when we're talking about timber basis, it's the capital investment in timber. So that's the amount of money you have invested in your timber. And then we're also going to talk about this term of depletion unit, which is your basis, your timber basis divided by the timber volume on a property. And so your depletion unit is your basis per unit volume across the property. So that could be a certain amount per ton. And if you kind of think about that capital investment in property, you'd have a certain amount invested in each ton of timber. You bought that wood, that's what you have invested in it. Now, I like to point out, so basis, again, is the amount of capital investment in property for tax purposes. So I just like to emphasize this is related to taxes. And it's not necessarily, what I say true value, it's what people call fair market value of the asset. So if you have something appraised, I feel like that's your fair market value, right? So you can have your timber appraised, and it could be appraised across your acreage for $100,000 or $50,000. Now, what you've invested in that could be much, much higher. It could be much, much lower. You could have got a great deal. You may have been desperate to buy and, paid 5 times as much as you should have or could have, but you enjoyed it. It was worth it to you, but that's not necessarily fair market value. So when we're thinking about timber basis, it's not what your, it's what, again, what you have invested in the property. It's not necessarily the appraised value of it. Again, right? So when you buy some property, there's a bunch of different assets on the property. To some degree, these are obvious. To some degree, to some degree, you can aggregate them. In some cases, you can't necessarily do that. So an example would be you buy raw land. Generally, that raw land is comprised of the land itself and timber on top of it, right? And so you could appraise the land and you could appraise the timber. And that's what you bought. Let's say you're down south and there's a lot of oil and gas, natural gas, things like that. You might buy land and there's a timber, you have a timber appraisal, land appraisal, gas. Out west, water rights are really important. So maybe there's, just land and your water rights. So to some degree, a lot like conservation easements where you have these bundles of rights, bundles of assets, you can kind of tease them out and appraise those different assets, or they're just lumped in with the land. But again, typically around here, you have that timber and land as sort of that raw land piece. Let's say you have a house let's say you buy land with a house. Then you start teasing out these additional assets, right? So you have timber being appraised, you have a house being appraised, and land being appraised. And you see this on your tax bills, right?
Andy, quick question.
Yeah.
So if I bought a woodlot and it's got obviously timber and land, but then let's say this particular woodlot also has a whole bunch of trails and roads on it. Does that get captured in the land value, or is it like squishy and nobody really knows how to value it?
And so this is, someone else may have a better answer. The best answer that I have is it's very squishy, as I've seen, and that's not, again, formal tax advice, but like, for instance, when you have a timber appraisal and land appraisal, very rarely is the land appraisal really just raw land liquidated of timber. So even though I say it this way, like, yeah. So I think it's squishy, and then, but yeah, or gravel could be a good example,
Sure. Yeah.
But when my impression is, and this is just an impression, but it seems to me that it's not advantageous to start teasing out these different assets until you're capturing value from them. Yeah. And so, something like gravel, sand and gravel around here, technically, you could identify that and tease it out, appraise it. But if you're not making money off of it, it's a cost and you don't capture that in any way. And it takes away from, let's say, recapturing some of that timber basis.
Yep.
But yeah.
So it seems to me as though often around here, if you buy a lot and then you get a management plan done, that first management plan is going to give you a value for the timber. I mean, right or wrong, it's going to come up with a value.
Yeah.
So you do get a value there.
Yep.
And then it seems to me as though more often than not, the tax people, the bookkeepers end up saying, well, it's 50% timber, 50, whatever you paid $100,000, 50,000 is timber, 50,000 is raw land. And then, that gets divided back into your, whatever the value came up with on the, how much volume you had on your,
100% right. And sorry, everybody that's a little less familiar with that. We're gonna get right there in the next few slides. But no, that's exactly it. So thank you. Yep. All right. So again, just reiterating, right? So you're purchasing this land, you have these different assets, they get appraised. You can buy this property for a great deal, poor deal, whatever. But the basis is the proportion of your purchase price allocated to these different assets. And so the way this kind of would look, and these are the simplest examples I can give, but stop me, chime in if it's not clear. So an example would be you buy land for $100,000. Again, that's your purchase price. That could be $1 million. It matters, but that's what you bought it for. Now, the important part in calculating your basis is you're getting your timber appraised. And, as we just mentioned, let's say you have a management plan. You'll have an inventory, and there's value associated with that inventory that can act as a timber appraisal. Technically, that appraisal should be at the point of when you purchase the property. So you bought it in 2009, you may have a forest inventory in 2011. By the letter of the law, the appraisal should reflect 2009. I'm not getting, into that. You can grow it back X percent or reduce X percent or talk to your forester on how you do that, but that should be a very minor calculation generally. So your timbers, all right, so you bought your land, you have your timber appraised through a management plan, or you talk to a forester, say, can you give me an appraisal? That timber, they say, you know what, you lucked out. You bought the land at the same price as the timber's appraised at. Isn't that awesome? The timber's worth $100,000 if you liquidated it. And then the land's appraised as well, because that's the other asset you purchased. The land happens to be $100,000 too. So you have $200,000 of appraised value. So according to these appraisals, you have $200,000 of value you captured, and you bought your land for $100,000. So when you think about, okay, how much then did I invest in my timber asset? How much did I invest in my land asset? You really figure out the ratio of those appraised values to the total appraised value. So like what percentage of your timber value is your total appraised value? In this case, it's $100,000 of the $200,000, so 50%. How much of the land, relative to the total values, the land appraisal? Well, that's about 50% of the total appraised value of all the assets. So you take those ratios and apply it back to the purchase price. So we're saying, how much of that 100,000 did I invest in the timber? It's 50% of what I bought the land for. So it's $50,000. I invested $50,000 in the land, 50,000 of my 100,000. And that's based on the percentage of the appraised values. So hopefully that makes sense. Now, a different example, and hopefully, this makes sense now this time, is you go, okay, let's say again, you bought your land for $100,000. And it just happened to be, you got a great deal on the timber. There's a ton of timber out there, $134,000. Your forester says, great job. This is so cool. We can do all this great management. And the land was appraised for even less, so $66,000. In this example, it could be any numbers, but in this example, it totals $200,000 of appraised value. So you have timber was 2/3 of your total appraised value. The timber appraisal was 2/3 of your total appraised value. The land was 1/3 of your total appraised value. You apply those ratios to your purchase price of $100,000. And so you have 67,000 of your 100,000 that was invested in timber. You have 33,000 of your 100,000 that you bought your property for, that you invested in the land, and that's your basis. So if this is totally new, I know this probably feels like a lot of numbers. If it doesn't make sense, feel free to stop me and have me try to reiterate it, and we're going to keep going through this. And again, even at the end of this, if you're like, you made no sense, Andy, or this is just a lot of, gibberish to me, reach out afterwards if you've had a timber sale and you want to work through it, and I'm happy to work with you. All right. So we figured out our basis. This is how we, figure out our basis here. And then our timber basis is what we've invested in our property for tax purposes, right? What we bought the timber for tax purposes. Then you bought that timber and there's a certain amount of wood out there. As a landowner, you need to figure out how you want to represent that wood. We mentioned earlier or in the previous presentation, there's MVF, and that's how you often buy and sell saw timber, a certain product. You have tons for low grade material. There can be cords, usually for firewood. So as a landowner, you can have all these different, your timber account, your timber basis, what you bought can be broken down into these different products. So I've invested a certain amount just in that saw timber, and I've invested a certain amount in terms of firewood and a certain amount in these different products you bought. That's your timber. As I mentioned at the beginning, I like to just make things as simple as possible. So for most people, you can fiddle around to maximize your tax benefit. Most of your benefit's going to come from the depletion, just doing this. So I tell most folks, if you're not doing this all the time, if it's not a business, if it's not whatever, just convert everything to tons. Or that's one way you could do it, right? I do it. I convert it all to tons. It just makes things simple. So you have all these different products. They're converted to tons. So stepping back again, you bought this asset for a certain amount of money. A certain amount of what you bought it for is allocated to the timber. And when you think, and that was the Bennett example, right? And the Prusik example. And then of that timber tax or timber basis, that represents X tons on the property. And what we're doing here is, so with this example on this slide here, you have your basis of 50,000. You may have 6,000 tons of wood on that 100 acres you purchased. And so if you figure out, how much did I invest in each ton? What's my basis per ton of wood out on the property? That's $8.33. And that's called a depletion unit.
And so
yeah.
Your disadvantage here is you're overvaluing your pulp and your firewood and you're undervaluing your saw logs and your veneer, right?
Totally. Yep. Yeah.
Okay.
And that can work depending on the type of harvest, whether you're, cutting higher value wood or lower, it can be more or less advantageous. And so you can fiddle with that stuff, but, again, just for simplification, for the average landowner, this makes it pretty straightforward. But so again, you have your basis that represents all the wood on your property, which is 6,000 tons. If you looked at the basis per unit volume, right? So the basis per ton on the property, that's $8.33. And why that's relevant is when you cut a ton, you're able to deplete that income. And so basically that $8.33 is not subject to federal income tax per ton. And we'll look at that in just a second. And sorry, if anyone puts anything in the chat, sure. I don't know if anyone puts anything in the chat. If you can just let me know, because I can't multitask. But
yep, I'll do so.
And so the other important thing here too is that, all right, so you have this basis, what you invested in the property, what you invested in the timber, that represents a certain volume, and we can figure that out. Now that volume will grow over time, right? So your trees are growing. You still invested the same amount in the timber when you bought it. That timber keeps growing. So what you have invested per ton, if the trees have grown, you haven't done any cutting, is going to go down over time. So the overall amount you have invested in the timber is the same. It's 50,000. If you liquidated the property, that's $50,000 of depletion you can have. But per unit volume, as that volume goes up over time, the depletion unit per ton is going to go down. And
so, Andy, do you do some sort of estimate every year, or is it like 10 years from now when I do another forestry management plan, I get a brand new inventory, we've cut stuff, but stuff's grown, blah, 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 and then you do a new valuation?
You're technically supposed to,
adjust it
wouldn't.
every year?
Yeah, I wouldn't. Typically, I do it when you're harvesting, when you're going to do the depletion deduction. And
Yeah.
there's a significant cost. It's what everyone's comfortable with their own tax liability and risk and so on. I think most people don't go through a full inventory. If there was a recent inventory, they don't go through an entire new inventory, but will grow the trees forward, like a ton per acre per year is a common growth rate. So folks will go, yep, 2 years ago, it was this. Now, ton per acre per year, we're at this general volume, close enough.
So it's like 1%. Ton per acre per year is like roughly 1%.
Yeah, and we can all argue about it as foresters, but again, that's a rounded number. Yeah.
Okay.
And it's yeah. Yeah. All right. So let's see. Yeah. So again, depletion in a nutshell, you establish your timber base at the time of purchase. There's a certain amount of depletion you can do per ton. And then when the harvest occurs, you generate revenue associated with a certain amount of volume harvested, right? So the depletion is based on the volume that's harvested. And then associated with that volume was your revenue, and you can reduce the taxable income on that revenue based on your depletion unit per ton. So again, so a landowner cuts 2,000 tons. This is where the rubber meets the road, right? It can be, again, it can be tons of chips. You could have pulp, firewood, saw logs, 200,000 MBF of saw logs. We're converting this all to tons for simplicity. And because that's how, a landowner might, record their timber account. So they receive 38,000 in revenue. You could have a few different scenarios, right? You're uninformed, you just claim it as ordinary income. I took a certain tax bracket that might be applicable, and you pay 9,500. Now you're a little bit more informed. You came, you said, you signed up for the class, talked to Sherry. You're like, yes, this is awesome. You're a little more informed now. You realize you can, you've owned the property for more than a year. You've owned the timber for more than a year. You can claim it as a capital gain. It's 15% tax rate. And so you pay 5,700 in federal income taxes. Now, you want to take it a step further and you go, Andy mentioned this depletion deduction. I think it's applicable. I'm going to talk to my county forester or talk to Andy and just run through this with them, or talk to your tax professional, right? And so you harvested 2,000 tons. Again, landowner cuts 2,000 tons. We calculated that depletion unit. If I go back here, right, we said there's $50,000 of basis, and we know how to calculate that basis. There's 6,000 tons. So our depletion unit's $8.33 per ton. So when we go here, you have 2,000 tons harvested. We can deplete $8.33 per ton. And so when we tally that up, when we calculate it, it's $16,000, $16,666 that you can deplete. And so that means that's income that you don't have to pay federal income taxes on. And so you're taxed, instead of on 38,000, you reduce your 16,666, and your actual taxable income is 21,333. And so from being really, less informed to more informed, and then, figuring out, this could be a situation where we want to do the depletion deduction, you can save, $6,000, 2/3 of your taxes, potentially. Or even pay almost half the amount of just a capital gain.
Just
So
a novice, I have a novice question. So the money I paid for my consulting forester and like roads and improvement to get access, where does that come into play?
So those are expenses and you can only deduct, I'm not a tax person, but those are expenses. If you'd run it on a hobby basis, you can only deduct them from your income when you have income. If you're running it on a business, you can deduct those on an ongoing basis year by year.
And so again, I would just go back to that hobby versus investment. I think
Versus
you'd want to
business.
demonstrate that it's an investment and take that deduction. So by the way you demonstrate it's an investment is saying in a management plan or documenting somewhere that there's a profit motive. And yeah, just to reiterate, that can be expensed against the
But you've
income.
also got to have 500 hours a year of time.
Right. But yeah, but if you were, let's say, having a harvest,
Right.
In that given year,
Then
your
you can deduct
forester,
your forester
yeah,
expenses.
yeah,
And
your
you can
forester.
you can carry those forward from year to year until you have a harvest, until you've got income. NRCS income also qualifies as income. You can deduct expenses against that. Your contracts.
I have a farm and we have income from various sources. We sell hay, we hire out draft horses, we do a number of different things, grow flowers, bunch of stuff. So we, file a tax thing every year on our farm income minus our expenses, veterinary care, etc. And then, so you throw in income from a harvest, but do you have to have the 500 hours?
Can he mix that in with his farm income, Andy? Or does it have
I
to be
think-
treated separately?
I mean, I'd talk to your tax professional about that one, but I'd think of it as an integrated business if it was me. That's how I'd talk about stuff.
Phil, you may want to run it past Rick Renzelman down in Keene. He's really good at that stuff.
Okay, yep.
So and then everyone should use this depletion deduction, right? We can save all sorts of money, and that's sort of true. Maybe not, right? So a timber appraisal can cost money, land appraisal can cost money, or hiring a forester to help you with this stuff. So the real questions, when did the savings exceed the costs? And so generally when, here's the situation when it makes sense, if you have a management plan with your, if you're getting a management plan for your property, interested in long-term stewardship, it basically makes sense. You already have that inventory, that appraisal. If you're not sure, if you're talking to a licensed forester, they can help you understand whether it makes sense to get a basis. And that's based on timber volumes and values. They can do that through a walkthrough. It doesn't have to be extensive. Generally they can have a sense of what the volumes and values are, not real specific, but and they may also ask you a few questions related to how you got the property, because that can affect your basis. So I mentioned earlier, when you're purchasing property, we went through that calculation of a tax basis, timber tax basis. When you're inheriting property, you get a stepped up basis. This is really important if anyone's inherited property. It's called a stepped up basis, where the timber basis isn't a portion of, what you bought it for or something like that. It's the full value of the timber. So if you have inherited property, usually, depletion can be very advantageous to you if you're having a timber sale. So they can kind of talk with you about some of this stuff. And then I have a simple decision model also, where you can throw in numbers and values, and it just sort of tells you what your savings is going to be. Not perfect, but kind of a back of the envelope. Yeah.
Sorry. So if there was an inheritance, you would need to have a brand new appraisal for land and timber at that time in order to do the step up basis.
Yep.
Okay.
Yeah.
Andy, I just wanted to give you a heads up that we're nearing the end of our time.
I am so sorry.
Okay.
Yeah, I always go longer or I go too short. But all right, I think I'm at the end as well. So just the rules of thumb, usually it's really helpful. So if it's your first cut, so the depletion's a use it or lose it deduction. So if you've had multiple cuts and then you want to, deplete timber and take advantage of that tax benefit, you actually have to calculate your depletion from prior cuts. And so your basis keeps going down, and the amount of value you can spread, your basis value can spread across the volume on your property tends to be pretty low. So we can go into that more, but generally, you've cut most of your tax benefit away if you're on a third harvest sometimes. Not every situation, but that's a general rule of thumb. First cut, earlier cuts is more helpful. If there's low appraisal costs, or if you've spent a lot of money for your property, then there's a lot of value that you can typically allocate towards timber. If you've gotten an amazing deal, sometimes I'll talk to people and they say, "Oh, I got this in the 60s for $20 an acre." It's like, that's amazing, but you're not going to realize much tax benefit. You didn't invest a lot in the property, so there's not a lot that you invested in the timber. So there's very little you can recapture from that depletion. Yep. So, if things are cut fairly heavily, and so I'm not advocating for hammering properties for the tax benefit. I'd actually say that could be very misguided. But if the property was cut, if there's a significant amount of volume cut, there's usually a significant basis that's being recaptured in depletion that can be accessed. So, if it's a super light cut, you're probably not going to realize the whole lot of tax benefit, but it's still worth looking at. Yeah, and then cutting close to when the appraisal's done, or else there may be additional costs. So, but again, just rules of thumb, when it's a little bit heavier cuts, when you've paid a fair amount, when you have a management plan, all of that goes towards aligning with the pretty significant tax savings. So again, sorry for going over. Thank you so much, Sherry, for organizing this and putting this on.
Thank you, Andy. Any last questions?